Hi everybody, Alex Deployer from Expert Forex, and in today's video we're going to be discussing a very important thing, and that is the biggest mistake that robot traders make, and we're going to show you how to fix it. Now, in this video that I made just a couple of days ago, I disclosed a secret that if you use that secret, you will never have robot trading problems in your life. So please go and have a look at this particular video. It explains that secret in a lot of detail, but I'm going to take you even further than what I showed you in this particular video. But please go and watch this video first. It will give you a little bit of background to what I'm going to be talking about in this video. So the secret to robot trading success is finding robots that, when optimized, so optimization is not a bad thing, when optimized, provide equity charts that are quite nice and constant and go up with very few drawdowns. Now you can see these equity charts I have on the screen are what we're looking for, and in fact these are from one of our EAs, and as you can see, these are the type of equity charts we're looking for. So why are these equity charts so important? Firstly, they don't have drawdowns, or very small drawdowns. Secondly, they have traded, and in this case they've traded over a year, they have traded through the most horrific times in the market, up and down, sideways, and they have maintained their profitability. So they are an example of robust settings that will work in any markets. This is the holy grail of robot trading that I'm talking about now, and these charts are around all over the place if you look for them. If you can put together a portfolio of robots that are generating these kind of charts, you will be printing money at low risk, because as you can see, the settings are very reliable, there are no drawdowns and that type of thing. And so firstly, they are more reliable to all market conditions. And secondly, when you have these charts and they are so reliable, you can become very aggressive. You can start using percentage of equity position sizing techniques rather than fixed lot trading techniques. And I don't have to tell you where percentage of equity takes you into the sky in terms of money. So what I'm showing you here is quite revolutionary, and I'm going to show you not only what you'll be hunting, but how to find these. Now, there's an expression called "don't feed pearls to pigs." And on the screen there, it basically says, and it's actually comes from the Christian Bible, and it's a saying that Jesus had, that cast one's pearls before swine. Don't cast one's pearls before swine. Don't offer something precious to someone or a group of people who are unable to appreciate it. Now, I realize this video falls into this category. It is going to go over a lot of people's heads, and they will not realize the gravity of what I'm showing you here. People that will appreciate it are people that have spent a lot of time optimizing EAs and have failed. Those people will immediately see where they've gone wrong, and they'll know how to rectify it. But if you haven't gone through that process, you won't appreciate what I'm going to be showing you. Now, that doesn't mean you are bad. It just means that you're not ready. It's a bit like trying to talk to a child that just joined nursery school about higher mathematics. It just won't work, because the child won't appreciate what you're talking about, and you'll be wasting your time. But the child might grow up and become and do well at mathematics, and then the child is ready and there's no problems. You can then talk higher mathematics with the child. So the same thing applies. Some people watching this video might not be ready for the message that it gives, and I have experienced this through my teaching career, where I have given literally pearls of wisdom to people, and they've just looked at me and said, "Oh, that's interesting," and done nothing. Barry Thornton and myself have actually shared our most intimate trading secrets with people, and it's just gone straight over their heads. They've never even tried them out, and since then we've been very cautious about who we share and what we share with. Now this, what I'm sharing with you today, falls into a very major area of information, and you might not be ready for it, but you, on the other hand, you might be. Okay, so we're going to talk about the biggest flaw or mistake made by robot traders when they use optimization. Now, any trader that's used optimization results will be able to confirm that optimization settings are not always the best settings around. And here's the problem. It's because optimization in general is done to get the best profit that was made in the last period. So the whole exercise, all the computers, all the time, all the templates, all that type of thing is all done to generate the settings that generated the best profits in the past. Now, the problem with best profits is the higher the risk, the higher returns. So the best profits are often the most riskiest settings that you could ever get. So what we should be optimizing for is we should be optimizing for smooth equity charts, because smooth equity charts have very little risk in them, they're reliable, and that's what you want to use when you're trading. So most of the industry is optimizing for the biggest profit, which is the most risky and the most likely to fail, rather than for smooth equity charts that are the most reliable and have the greatest chance of success. They are aiming this massive effort in the wrong direction. Now, optimizing for smooth equity charts cannot really be done in normal circumstances. You have to be very clever at changing the optimization setup for it to show you the best equity charts. So it's not, those charts don't necessarily provide the biggest income, but they are the most reliable. At least you can sleep in the night. Your drawdown's not going to be big, and you can put more money on the results because they are more reliable. Okay, so now I'm going to show you one way that you can find these smooth charts. But there are many other ways. In fact, the most correct way is to optimize for smooth charts right from the start and use those settings. But I'm going to show you a way of using the existing optimized settings that are available to find the most reliable ones. Okay, so let's start here. I am going to start with the Expert Forex main page, and where I'm going to click is the up-to-date report of results and settings. So I'm clicking on that, and it brings up the optimized settings for all of the year, and there must be about 400 to 600 optimizations that are represented here. So this is a fantastic setup. You can really look at all the optimizations for most of our EAs, and I'm going to select the tradable MACD as for this particular example, and there's the tradable MACD. So I'm going to actually click on the tradable MACD, and I'm going to select the most recent results. Okay, so here's the tradable MACD's results. Results aren't that great, but the owner of a MACD robot would look at this and say, okay, I'm going to choose the best result. So they'll sort there on profits, and they'd choose that particular the best results there. And they would then use those settings. Now, let's take one step backwards. One of the biggest things that you want from trading or forex trading as a whole is you want low drawdowns. But drawdowns are not bad if your income is high. So you need to get a balance between income and drawdowns. And quite a few years ago, I realized a very important ratio that exists. And that's a very simple ratio. It's actually the drawdown to your profit ratio. So how much money, so your drawdowns represent the risk that you're going to take, and the profit represents the potential return that you can make. So basically, I did a ratio that says, okay, how much money am I going to make for the risk that I'm taking? So you essentially just divide the money that you're making by the risk that you're taking, and you get a factor, which I call the return on drawdown. Return on investment, but return on drawdown. That's one thing that I made up, and that's what you'll find, that ratio in all our optimizations, and there's a reason for it, because we use those ratios. All right, so we say, okay, this one is the highest return. It's got a 5.8 ratio. Now, does a 5.8 ratio generate a smooth equity chart? So let's go and have a look. So the equity charts are below. So we remember this, the Aussie 1 hour. Let's go and have a look what the equity charts look at. So I just go down, and there we go. All right, so there's the equity chart. So I go and look for the Aussie 1 hour. Okay, so we look here, Aussie 1 hour. Here's the equity chart, and there it is. It's like a sideways, upwards, sideways for most probably 6 months, and then slightly upwards, and then slightly there. Now you've got to ask yourself, you've chosen that set file to trade it. What if you start trading it at a point like there? You will be going sideways for 6 months before anything happens. If you're lucky, you'll have caught it at that point over there, and you'll make some nice gains. But you have to look at the equity chart, because this is where this chart will tell you what to expect. The only problem is you don't know when you're joining it. So as I said, if you join it there, you're going to get nothing. If you join it there, you're going to get you're going to be very happy, and so on. So this does not represent a smooth equity. It's not a bad equity chart, but it's not smooth. And you must realize that's what a lot of people do when they choose their set file. They don't come and look at the equity chart to know what to expect. Now, the equity charts that really look weird, like that. I mean, that's not bad. It's going up, but there's huge drawdowns in that one. And so you can tell the profile of the settings that you have chosen by going to their equity charts. Okay, so now hopefully this works. I haven't actually tested it, but hopefully it works. So let's go and reselect our set file. Now, based on what I've told you earlier, what we want is we want the best return on drawdown, which is that ratio over there. So all we have to do is sort it. And here we have, remember the previous one was about 5 or something. Here we have 11. Now the income's lower, the drawdown's a lot lower, and we have an 11 factor return on drawdown. So let's go and do the same thing. So it's the euro, it's the 4 hour euro. Let's go and have a look at those equity charts. So I go down here. Okay, there we go. So here's the euro 4 hour equity charts, and I always look at the tick ones because they are the most accurate. And now I hope you can remember, here we have a much smoother Equity, look how smooth it is. It has a few drawdowns, and the worst place you could have joined this one was about over there, because there's the drawdown, and then after that it's pretty smooth. So this equity chart is quite smooth compared to the previous one, and compared to all the other alternatives. I mean, look at that. That's going up. It's fine, but it's not smooth. It has a lot of drawdowns there, and this one too. Look at that drawdown period. So, and it's all jagged and that type of thing. But here we have a fairly smooth equity chart. So this is what I'm talking about. So don't go for the settings that generate the highest income. You might be lucky and catch those settings at the right time and really do well. Go for the settings that generate a smooth equity chart, because they are more reliable. They can trade through really bad conditions. And if you've had a reasonable success run, you can start using percentage of equity settings, which will multiply your earnings considerably. So there's the secret. There's an example of the secret, is pay attention to the equity charts. Use settings that have smooth equity charts. Just imagine you had a portfolio of trading instruments that only had smooth, very smooth equity charts. What are your chances of success compared to a random portfolio that only selects the very best, the very most riskiest settings that there are? What do you think your chances of success are? Okay, so just to recap, and this might be an interesting exercise for you to do, is go to our settings. I've shown you how they open. It's open to non-owners of our EAs and owners of our EAs. We want you to do these exercises and come and do exactly that. Go to every single EA and click on the return on drawdown figure. Try and get the very best settings for that particular EA. Then go and have a look at their equity charts for that particular one, and go and have a look at the equity charts for the biggest one, the one with the most profit, and compare them and say, which equity chart would I like to do? Do it for all of our EAs. Okay, so what can you learn from this video? This video has shown you how to find smooth equity charts compared to the jagged ones that could exist for the most profitable optimized settings. So you've learned that concept, and you've also learned how to find the most reliable charts by sorting it on that return on drawdown statistic, and rather using those ones compared to possibly the highest ones. Sometimes the highest ones are in fact also the biggest return on drawdown numbers, so that's pretty good. The other thing that's coming out of that is that we are now going to make available smooth equity chart optimization settings to the premium club members in the next few weeks. Not now right away, but in the next few weeks. And you will then be able to find these equity charts a lot easier. Because remember, this is not the best way of finding smooth equity charts, in that we're still using optimizations based on the best settings. What we want to do is go right in and forget about best settings and optimize for smooth equity charts, and the way to do that is to optimize on the return on drawdown statistic. Now, I hope I've given a lot of robot traders out there something to think about, and to also reflect back. If you have been doing optimizations in the past, look back at the efforts that you've done, and you must realize that they are not optimum. Now, there are manual ways of finding the best return on drawdown figures, and that is when you do an optimization, you might come out with 10,000 passes. What you do is you just download those passes into an Excel spreadsheet, Do the return on drawdown calculation in a separate column and sort that column. That's how you do it for your optimizations in future. That is the best way to do optimizations. Don't take the best result, unlikely to be the same as the smoothest equity result. Now, if you've watched this video and all of this sounds too much, don't worry. There's nothing wrong. You're just not ready for this amount of detail in terms of optimization. If you are an experienced optimizer, this will mean a lot to you and might change the way you think about optimization. So from me, Alex Deploy, cheerio.